Today's video is on how chart confluence can boost Fibonacci trading. This is part 12 of our Fibonacci series. First of all though, be aware that trading for exchange and global financial markets is considered high risk and may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This video is for educational and informational purposes only, and by continuing watching this video you agree with this disclaimer and you are aware of the risk involved when trading. Before we kick off the video, take a look at this slide. 14 free webinars, trading festival in August and September at Elite Currency. Write to info@elitecurrency.com and email to join the list about all these great topics like Fibonacci, for instance, Heikin-Ashi, moving averages, and many more. Okay, let's start rolling. Fibonacci, as we know, we've discussed it many times, is a great tool for establishing entries and exits, for filtering out bad setups, and for analyzing and charting. But at times, Fibonacci trading might become confusing due to its multiple methods and options how to apply it, and there is discretion involved. To master Fib trading, a lot of experience is required. But there is good news. There is a shortcut for those that are starting, learning, or seeking to improve, and that is locating confluence on the charts. And here I have an example. You can see two Fib levels. The purple one is a retracement, price is going back to the Fibs, and the orange one is basically where price is heading to the target. The minus 272 target here, the orange target lining up with the 50 Fib as well. First of all, why is confluence important? Well, three things. Accuracy, first of all, because there's a higher probability that price will react to a level when there are multiple tools indicating it is an important level. Thereby, traders get more confidence to take setups because the trade often also works out in our favor. And this, of course, allows us to focus on our trading plan because we have more confidence. The higher confidence also leads to a better ability to learn and quicker because we are actually developing a better discipline, and that is very crucial for achieving trading success. So let's now talk about a bit more about confluence. Where do we get confluence? There are a couple of things. We can use Fibonacci to provide confluence, or we can mix Fibonacci with other tools. Let's first talk about Fibonacci itself. We can use the Fibonacci tools multiple times on multiple time frames and on the same time frame and multiple times. So looking at this, it's one time frame and we're using two Fib tools. And they give confluence. How? Well, one is a retracement and one is a target. So when they're lined up at the same level, that's confluence. The purple box is a 50 Fib and a minus 272 target. When price is reaching that zone, it becomes a support level in this case because they're two important levels at the same spot. We can also look at Fibonacci retracement levels at the same spot. Using different swings, we can place the Fib on different swings, and often enough there could be retracement levels at the same spot. For instance, here you can see that there is a 61.8 Fib, and if we would Fib perhaps from here, where I have the green box to the green box, that could be maybe an 886 Fib, for instance, and there would be two Fibs there. The same is valid for Fibonacci targets. We have a minus 272 target here of this swing, and a minus 272 target of this swing, right? Two different Fibs, but the targets at the same spot. We can also combine the Fib with other tools like candlesticks. The purple box, for instance, are bullish candlesticks at the 61.8 Fib. We can also use support or resistance like the trend line, the green trend line indicating support and price stopping not only at the 50 Fib at the green box, but also at the trend line. And the same holds true for the moving average. We see two light orange arrows. The moving average indicating support and price stopping there as well. So there's a confluence of price action, trend lines, and moving average at these Fibs. And moving averages particularly are interesting because they indicate the trend, and Fibonacci's, of course, first of all, work best of all in trends. But if there is a trend, then also the moving averages start to act as support resistance. So they're a very good confluence with Fibs as well. Well, that wraps up the video. I hope that you will join our webinars, free trading festival, and we'll appreciate any comments or sharing of this video. Thanks and good trading.